In class, if we will take a look of our accounts, okay, the real accounts are used for the preparation of the statement of financial position, and for the nominal accounts are used for the preparation of income statement. Okay, and class, on the equity account, okay, if we want to get information on the details of our equity account, we have to prepare a statement of owner's equity. If the details of the equity account is not very complex, we can include the statement of owner's equity as part of the statement of financial position. And now, class, we are going to discuss the preparation of statement of cash flow, or you can also call it cash flow statement. Okay? What is the statement of cash flows? The statement of cash flows, or the cash flow statement, is a financial statement that summarizes the amount on the sources and uses of cash and cash equivalents during a specific period of time. Example, a month, quarter, or year. Plus, take note that it is the statement of cash flows that need to be prepared very frequently. In most companies, ginagawa ang statement of cash flows on a monthly basis, and some are even preparing statement of cash flow on a weekly basis. Okay? The cash flow statement measures how well a company manages its cash position, meaning how well the company generates cash to pay its debt obligation and fund its operating expenses. Kaya importante, class. Dahil ang cash ginagamit sa pagbayad ng mga expenses. How to use a cash flow statement? The CFS allows investors to understand how a company's operations are running, where its money is coming from, and how money is being spent. The CFS is important since it helps investors determine whether a company is solid. Solid means stable, nakakabayad ng utang. Creditors use the CFS to determine how much cash is available, referred to as liquidity, for the company to fund its operating expenses and pay its debts. Okay? Let's continue. Now we are going to discuss how to prepare a cash flow statement. First is the heading, name of the company, name of the statement, and the period, the end of the period. Next, let's present the three main sections of the statement of cash flows. The first section is operating activities. The principal revenue generating activities of an organization and other activities that are not investing or not financing. Ang ibig sabihin, basta hindi siya investing, hindi siya financing, operating activities ang classification niya. I-discuss natin what is investing and what is financing. Okay. Cash flows from operating activities, normally ito yon. Cash flows, inflow. Okay, so that this is the source of cash. Cash received from customers for revenue, that is service income or sales and other income. And cash received from collection of receivables. So itong dalawang ito are the sources of cash in relation to operating activities. Ang use ng cash in relation to operating activities is payment of expenses and payables for expenses. Take note, class, yung mga payable lang na related sa expenses. So yung mga payable na related sa pag-purchase ng mga equipment, hindi kasama dito, o pag-purchase ng assets. Okay? So expenses lang. Okay. Next, investing activities. Any cash flows from the acquisition and disposal of long-term assets and other investments not included in cash equivalents. Okay? So ito yung mga investing activities natin will include proceeds from sales of non-current assets and long-term investments. Ang ibig sabihin, basta nagbenta ka ng assets. Okay? Yun ang source under investing activities. And Ang use naman under investing is basta bumili ka ng assets. Okay? Payment for the purchase of non-current assets. Okay? Or construct ka ng building. Okay? And next is financing activities. Any cash flows that result in changes in the size and composition of the contributed equity or borrowings of the entity. Basta nagkaroon ng changes ang iyong um, loan or equity, then it is under financing activities. So cash flows from financing activities ang sources, cash investment by owner and loan from bank. Ang uses under financing, withdrawal by owner and payment of loan. Okay? Then determine the net increase or net decrease from operating, investing, and financing activities. So bawat activities, i-determine natin yung net increase or net decrease. Okay? And then after that, we will add the cash balance of the beginning. So we can determine the cash balance end. Okay, class? Let us illustrate that further. So basically, ang nire-review mo when you are preparing a cash flow statement is yung mga yung cash account mo. The debit will be the sources of cash and the credit is the uses of cash. Okay. What are the activities that we have discussed? We have operating activities, we have investing activities, and we have financing activities. Under operating activities, nandiyan yung source natin, cash received from revenue, from cash sales and collection of receivables. So, ang nagiging entry natin dyan, di ba? We receive cash. In this case, receive cash of 19,000 from our sales and from collection of 9. So, we have received 19. So, mangyayari magiging source siya ng cash, 19. Okay? And if we pay expenses, okay, normally the entry would be the pro forma entry would be we debit expense and we debit payable. We pay the payable for the expenses and credit cash. So itong 15 na ito, that will be the use of cash, 15. Okay? Under investing activities, so we will the source under investing activities is the sale of assets. Okay, in this case, we will be like in this case, we have sold an equipment, and the equipment's value is 25. We sold it at 27, so we receive cash of 27, and then we credit equipment and credit the gain on sale of equipment. So in this case, this 27 will be the source from investing activity. Okay, and if we purchase assets, non-current assets, the entry is we debit the assets that we have purchased and credit cash. So in this case, we have used the cash for the purchase of land. So there's a use of cash of 29. Under financing activities, the source is the investment from owner. So in this case, if the owner invested cash of 39, so we debited cash and credited credit owner's capital. Okay, so in this case, this cash is a source from financing activities. And another source is loan from bank under financing activities. So if we have loan 38 and then credit loans payable, so this 38 is a debit to cash. Okay, and if for financing activities, the use will be the withdrawal by owner. So in this case, if the owner withdrew 3, and then there is a credit of cash here by 3. Okay, and if we pay the loan, and there is a credit of 4, so there will be a use of cash of 4 for the payment of the loan. Then if we are going to get the totals, debit has a total of 123 and credit has a total of 51. So the net amount was 72 debit, meaning this is the balance of cash, 72. Okay. Now we will continue, And what we are going to discuss is the preparation of the statement of cash flow, and then the method that we're going to use. Actually, uh, direct method is a direct method because we are directly examining the details of our cash. Okay, this is what we have. Okay, so the first thing is we have to put the heading. Okay, let's put the heading, and the next is cash flows from operating activities, and we have 19 and 15. Okay, and next is cash flows from investing activities, and we have 27 and 29. Process from sale and payment for the purchase of assets. And so you will have to determine now the net increase and net decrease of each activity. So in this case, there's a positive 4. In this case, there is a negative of 2. And the last is from financing activities. We have here the investment by the owner and loan from the bank here, 39, 38, and withdrawal by the owner and payment of loan 3 and 4. So the net amount is 70. So if you will add all of this, we will have 72, and as much as we don't have any beginning balance, so our cash balance ends will remain at 72. Okay? Okay, let us have again a further illustration of this. Plus, in most cases, some companies they don't have any complex activities in relation to cash. So some companies have a different way of presenting it. Okay, so you can also use this presentation. Okay, but it's still a direct method. However, the presentation may be different. Here, you will have to identify first all the sources of cash. And obviously, your sources of cash are your debits. Okay? So in this case, the sources of cash will be your cash received from customers, process from sale of assets, investment by owner, and loan from bank. These are the sources of cash, and the total is 123. And now you will deduct the uses of cash, and the uses of cash are all your credits. So in this case, you have payment of expenses 15, and you have payment for the purchase of assets of 29, and withdrawal by owner, payment of loans. So you have the use of cash in the amount of 51. So if you will get the net balance, you will have 72, and then cash balance beginning is 0, so your cash balance ends is 72. You can use this format class. Okay, you don't have to classify whether it's investing activities, but as long as you know, okay, how did you source your cash? Okay, if your transactions are not very complicated, you can have this format. Okay, okay. Now let's have an illustration class. We have here a problem. Piolo Rosales opened a travel service business and registered it as a PR Travel Services on August 28, 2018. Below are the financial transactions of the business for September. Required, prepare journal entries, trial balance, statement of financial position, income statement, owner's capital statement, statement of cash flow for September 2018. Plus, we will not discuss much about the preparation of journal entries, the preparation of trial balance and statement of financial position, income statement, owner's capital statement. What we will be discussing in detail is the statement of cash flow for September 2018. Okay? So financial transactions and journal entries. This is the financial transaction and the journal entry is this. Okay? Next, this is the financial transaction and the journal entry is this. Next, this is the financial transaction and the journal entry is this. Okay, this is the financial transaction and the journal entry is this. Plus, here in this case, okay, there's a purchase on equipment on account, so there is no cash involved here. Okay. And next, this is the uh, transaction, and the journal entry is this. We have learned this, so I'm not discussing this in details. This is the transaction, and this is the journal entry. Class, now it is only the time that the account was paid that there is cash. Okay, so uh, the payment of the equipment will only be reflected when it is actually paid, or the purchase of equipment when it is will be reflected in your cash flow when it is actually paid. Okay, take note of this. Okay, so this is the transaction of September 21st, and this is the journal entry. The transaction of September 22, and this is your journal entry. Okay, transaction of September 24, and this is your journal entry. Transaction on 25, and this is your journal entry. Okay, transaction of September 27, and this is your journal entry. Okay, transaction on 30, and this is your journal entry. Okay, how much is the total account of Sarah? It's 28,800, so she paid half of it, so it's 14,400. That's correct. Okay, and this is the transaction September 30, and this is the journal entry. Okay. Okay, now then after we are done with the journal entries and we want to extract the balances, I will just use the columnar format, okay, in extracting the balances. We have discussed this class wherein you have the columnar format. So here, class, the positive on the cash accounts. The positive means that these are the debit. The negative means that these are credits, okay? Okay, of your cash account. Okay. And here, class, take note that here we are just extracting the end balance by deducting the owner's drawing, adding the revenue and expenses. And the revenue expenses are presented in the next slide. Okay, 37,800, 91,800. Okay, class. So take note, class, that these are the expenses. So these expenses were paid. You have here the total of 37,800. Okay, and these expenses were paid by cash. Okay, some of the expenses, okay, were paid by cash. Okay, this is the expense 37,800. So now we are going to make a trial balance. So based on the balances of the accounts, we have this trial balance, and then we can now prepare the income statement, and then prepare the statement of owner's equity, and then prepare the statement of financial position. Okay? And now, class, we are going to prepare the statement of cash flow. In preparing the cash flow, what we need are the details of your cash. So we need this. Okay? So we have to know now where are these details coming from. So based on our discussion, we can the main section of our statement of cash flow are operating activities, investing activities, and financing activities. Now we have now to classify uh, each amount, whether they are from operating, from investing, or from financing. On September 1st, there's a positive of 90,000. So this is owner's capital. So this is investing, cash flow from financing. I'm sorry, this is not investing, but cash flow from financing and this is 3A, investment by owner. Okay, let's have it as a cross-reference 3A. 180, this is a loan, so a loan is 3B. Here, 81,000, and it's a purchase of furniture, so that will be 2B. It's a reduction. It's a use of cash. And here, 9,000, this is a drawing, so this is 3C. Okay, 99,000, this is a payment of payable in relation to equipment, so this is 2B. 27,000, if you will look at your revenue account, this 27,000 is from 1A. And the 2,700 is an expense, so it is 1B. And 900 is also an expense, this is 1B. 18,000, this is a revenue, a collection of your receivable, as well as the 14,400, so both are 1A. Okay? And then the 34,200 here is negative, and that is the payment of expenses, so that would be 1B. Okay, now we were able to classify this, so now we can prepare the statement of cash flow. Okay, the first one is cash flow from operating activities, so meaning all the 1A and 1B, okay? Then cash flows from investing activities, we have 2. We don't have anything from sale of current assets, but we have purchase of non-current assets, I would say. Sale of assets we don't have, but we have purchase 81,000 plus 99,000, so we have 180,000. Okay, and then we will now, so class, make sure that you will get the difference. Okay, here in this you have a positive, here you have a negative, because we don't have any process from sale of assets. And for in financing activities, we have 3, we only have 3C here and 3A and B here, okay? So we have 90,000 and 180 and C's. So plus you will note that I made a reference, okay, on the where it is coming from. So in this case, you have a net increase in cash of 102,600. Your cash balance beginning is 0, so your cash balance end is 102,600. Okay, class, as I have said, you can present it in a different way, okay, if it is not so complex. Okay, class? And any question? This is all for now for our statement of cash flow. I hope that this will be helpful in your other subjects if you are asked to prepare the statement of cash flow. Okay, class, have a nice day and stay safe, healthy, and strong. Bye for now, class.